Hello, this is Richard Wilson here at the Family Office Club, and today we're doing an investor mandate interview with my friend here, Dr. Forrest. Welcome, Forrest.
Hey, Richard, how are you? Thanks for having me today.
Yeah, I appreciate you being here. So I'd like you to tell us about how and what your daily perspective is and what you do.
Yeah, absolutely. Thank you. I'm the CEO of we're a registered investment advisory firm. We operate as a multifamily office, and we cater exclusively to the doctor and dentist crowd. So our clients are doctors and dentists from all across the U.S., and we help them with everything in their financial life. So not only with wealth management and asset allocation, but also helping them scale businesses, sell businesses, save on taxes. And our investment philosophy is really skewed toward the alternative investment space. So we do a lot of real estate, and we do a lot of private debt, private equity, and we can help them build a platform that is not necessarily contingent on what's happening in the market. We're filming this during the coronavirus crisis, and so a lot of our clients are very happy to not have a huge exposure to the market right now. So we feel really confident in what we're doing for our clients, and just appreciate you having us on today.
Yeah, sure. And it's been great to get to know some of your clients. Seem like good people. And you were on one of our virtual discussion panels lately, and you really drove home the community aspect of what you do, which I think is different than a angel investor club that gets together once a month. They hear a bunch of pitches, they then go on their separate ways. Another different people show up to the next angel club. And like in yours, it's really a community where people get to know each other. So I just wanted to point that out. It seems like a really distinct feature.
Yeah, I appreciate that. Doctors, by design, usually are kind of out on an island. So a lot of them own their own businesses, and sometimes they're the only one there. And a lot of times they're practicing solo. So a lot of times they feel very isolated and alone. And especially when it comes to things like investing and business
Right.
planning and taxes, they're so busy operating their business. It really helps, and we've really found that. There's a lot of value in creating a community where they can come together and they can be with other business owners just like them who are looking to do the same things. They care about their family, they care about freedom and legacy, and they want to grow a business and scale, and they don't want to lose their hard-earned savings and in the stock market. So building a community like that where they feel like they're not alone, and there's a lot of education that goes on, and they can ask questions, and there's no stupid questions, and we're there to help them educate themselves and to make good decisions. And it's a lot of social proof in the especially somebody that's new coming in to see some of our clients that have been in the system for 3 years and hear the success stories of how they've reduced taxes and how they've made double-digit returns over the last few years and how they've grown their business. And there's just
Right.
a lot of power in that. I can tell them it's great, but when they hear it from our other clients, that's really impactful.
Yeah, for sure. And I want to get to the actual investor mandate part of this interview, but to make it impossible to fit this in 7 minutes, I just have to make one more comment. Was that I was on Dan Sullivan's podcast yesterday, and he was interviewing me on what we've done for 13 years in the Family Office Club, and it's really identify a niche audience and serve them, because whether you're a capital raiser or a family office, you also feel isolated a lot of the time.
Mhm.
And from the first time that we ever spoke, I remember leaning forward and saying, wow, what you do encapsulates what we try to teach people to do in the Family Office Club to be effective in working with investors. Focus on a group, hit them between the eyes with value, consistently follow up with that group, and over a long period of time, you'll stand out because you're not trying to attract everyone, talk to everyone. So since we first met, I've been interested in helping you grow, what you're doing, and just, watching your success along the way has been great because that model. So I don't want people to miss that as we go into your investor mandate. I think it's so key to why you have momentum right now, right?
Yeah. Yeah, appreciate you saying that. One other thing that I didn't say on the front side was that I used to be a dentist, so I practiced for 20 years.
Right.
So, had my own small business and exited to a private equity company, and just going through that. And that's a big thing that a lot of our clients are looking to do. And I've walked in their shoes, and I understand what they're going through. And I think that that empathy for where they are really goes a long way towards really connecting with who you're looking to serve.
Yeah, for sure. For sure. Totally agree. All right. So to get back to the whole point of this interview here, in 2 or 3 sentences or less, what are the parameters in terms of location, size, structure, preferences? We got a little bit of that answer, saying that you do some real estate, some alternatives.
Sure.
What else looks like the scope of your mandates here?
So I'll leave the traditional publicly traded markets out of this. Although we do that, we've got a lot of our clients that come in with 401k and stock portfolios, but that's not really where we focus a lot of our time.
Mm-hmm.
On the alternative side, obviously a big real estate slant. So that looks like on the private debt side, private lending is a very big part of what we do. So a lot of that's in residential fix and flip lending. So
Sure.
we do have access to different funds that do that, but a lot of times for our doctors, we're helping them create self-directed IRAs and help them be the bank and be the lender. And so we have a network of borrowers that are part of our community from all around the U.S. And so they're in different geographic areas and different price points, and it really helps to spread that out. On the private equity side, we do a lot of different types of syndicated deals. So we're usually looking at Reg D, 506C offerings. We do some 506B, but mostly 506C. So some of those look like our core holdings for the portfolio are typically multifamily, self-storage, and senior living. Those are three areas that I like to have in all of our investment portfolios. But then we do some other things. We do some hospitality, industrial, workforce housing, student housing,
Sure.
RV parks, just anything that can kind of make sense to kind of go around that.
Okay.
But there's other things like I'm a big believer in precious metals as a hedge for a long-term portfolio. So I've been doing that myself for a long time, and a lot of our clients have really appreciated that. And then also looking into other things. I know you and I have had some conversations about life settlements, and right. That is an absolute return portion of the portfolio. And then we also do for a very small percentage of the portfolio, usually 5 to 10%, we will do a venture capital allocation. So we do 90% of the portfolios that we do are very solid, safe. We don't have to worry about big gyrations like we're having in the market right now. But we do take a little carve out and swing for the fences with that. So we do believe that game-changing technology is an incredible place to look. And then maybe that hits most of it, or that hits enough of it.
Yeah, enough of it probably, but that's a lot of different things. So in terms of, I want this to be valuable to people 9 months from now, not just during the virus kind of meltdown period. But in general, what is the thing that would be most attractive, easiest to work with, or that you're getting asked for the most from your members, and you actually think not only they're asking for it, but you think it's a good idea for them to go into? What's that number one most valuable type of deal?
Private lending is very, that's one of the first things that we teach our clients how to do. It's an incredible skill. And let me just say this on the private lending side, you can do private lending in any market. The private lending rates are going to be even higher going into a crisis like this. So just rewinding back to the global financial crisis, it wasn't unusual to see private lending rates. They're 5 and 15, which would be 5 origination points, 5% of the deal, plus 15% interest. Now, there's probably not anybody on the call today that wouldn't like to do some of those. The rates have come down a little bit, but we still in our community still see 2 and 13 or even 3 and 13. And we see those pushing back up right now. A lot of liquidity is drying up as we speak. And so private capital there's a premium for it because of the speed of deployment and just because of the ease, I guess, to work with private lenders versus going through institutional underwriting. So, I think that's one thing that we've been teaching our clients how to do that for the last 3 years. And that's that's something that if clients are out there and they don't know what I'm talking about, I mean, that's something that you should definitely learn how to do. Okay,
great. Yeah, no, that's very clear. And I agree. It's a popular area when you've got high quality collateral and income coming off of it. People like that worst case scenario. All right. And then what is your number one piece of advice? Maybe something that you wish you knew 10 years ago that could maybe save an investor $100,000 in fees, or a big headache or a waste of time that could be avoided?
Yeah. This one's really pretty easy for me to answer, and it really has to come back to taxes. So, a lot of our clients they're high income, high net worth. individuals, and some of them, take example like an emergency room doctor who's a 1099. He doesn't own his business, and some of these guys are making $500,000, $600,000, $700,000 a year. They're just getting killed on taxes. So one of the things that we do for all of our clients is try to take a really good look at their tax situation, especially for high income. There's really three areas that we really focus on. One is charitable leveraged investments. The second one is operating businesses. And the third one is energy. So right now, I think charitable leverage investments is a really great place for a lot of people. No matter if you're a single family office with a ton of capital, or if you're a high net worth individual, that's something that you should take a look at. Certainly some red flags there, so make sure you work with a really great sponsor. But I'm talking about land conservation easements and fee simple. So definitely want to do your due diligence right there. The second one in operating businesses. This is one thing that we can actually help our clients set up what we call active passive investments. So examples of those could be like owning ATM machines or owning water station filtration machines or ice machines, things like that, where you can actually, it's an active business. You own it. It's personal property. You can take 100% write-off deduction with that. And also it's a good investment as well. So sometimes they have very high double-digit returns. Sometimes you can leverage it. I mean, there's some really cool operating businesses out there that work really great for really anybody, especially if you're in a high tax bracket. But if you're a high income earner, if you're trading time for dollars and you want to create some other income streams, it can be really good now for the tax benefits, but also really good for the long term as well, as far as creating other revenue streams. And then also energy is a really great place to look at different tax advantage investments. And there's some really good ones out there.
Sure. Great. Yeah, no, I appreciate it.
But not, really easy if, for high income earners. I mean, they can have huge tax savings right there. I mean, that would be
right.
Not unusual for if somebody did those types of strategies right there, they could easily shave off $100,000 off of a tax bill. So
yeah, and most importantly is that when you learn those strategies, it's not just saving $182,000 this year. It's that even if you don't make any extra money the rest of your life and you make the same amount of money, you could use that same strategy next year, typically, and the year after. So if it saves you $100,000 this year, it's probably saving you millions of dollars over the long term, which sounds almost like too over the top to say, but it is the highest ROI for people setting up a new family office. I've found is getting trust and estate planning, proactive tax planning in place that pays for the whole family office for years to come, or it pays for all of the membership dues, et cetera, to be part of something like what you put together. So.
Yeah, 100%. And, I'm sure everybody on this call knows the power of compounding interest, but, the reverse to that is the compounding taxation. So if you keep that money in your pocket and you can create compounding interest on the money that you save from not having to deal with compounding taxes, it can really be incredible.
That's why I live in the beautiful state of Florida, is to try to help that situation a little bit. Oregon paid me to leave. That's what I like to say.
Yeah.
What's the best way to get in touch with you, Forrest?
Best way is probably go to our website, .com. You can shoot me an email, .com. Love to connect. Richard, thank you for having me. I love the Family Office Club. We've been members for I'm probably 2, maybe 3 years now. I don't know. It seems like we've had a really good connection, and I love what you're doing for your community. It's so powerful for family offices. I've met a lot of really great connections there. Some of our current sponsors I've met at your events, and so just want to thank you for that. And I just bring a lot of really great quality people there, and so thank you for having us. Looking forward to further collaboration on things that we're doing in the future.
Yeah, for sure. Thank you, Forrest. Take care.
All right. Thanks. Bye.
Bye.